Big tech earnings set to kick off tomorrow with Alphabet and Tesla reporting after the bell. Joining me now with what to expect, Intelligent Alpha's Doug Clinton. All right, so you've got these two big names. Will there be a similar fuel to what they report?
So Contessa, at Intelligent Alpha, we use the major large language models to actually predict earnings for about 1,000 different stocks that we track and potentially invest in. And our models think, to answer your question, that both Google and Tesla are worth owning going into earnings. So we actually own them in 2 of our funds. On Google, our models think that they'll have both solid top and bottom line performance. On Tesla, it's a little bit funny. The model's concerned about both the top and bottom line, but it actually thinks that everything is sort of priced in at this point. Everybody knows that, Elon sort of created some trouble for demand in the near term, and it still likes the stock. So those are the two that, even though they might have different outcomes in terms of their actual earnings, we think they're good stocks to own.
I'm curious about how much computing power it takes to ask AI about Google when there's all of this speculation about whether AI is going to kill Google search. And it certainly seems to be having an impact on what advertisers are willing to spend, considering how much click-throughs have dropped. How do you balance that?
What I think won't get the answer to tomorrow when Google reports is, what about the GPT overhang? I mean, that's kind of how we think about it. If you look at Google's multiple, Alphabet's multiple, it's 19 times next year. The lowest other Mag 6 stock is 25 times, and that's Meta. And so there is this, I think, reality that's priced into shares of Alphabet already, that people expect them to have this gigantic headwind from the shift to AI. I don't think we're going to see that impact numbers dramatically. I mean, we've had a few quarters in a row now where we've had this kind of question about what does the future of search look like? And despite that, we've still seen strong spend, even if we've had volumes and CPCs maybe vary a little bit.
And on Tesla here, what could be catalysts, especially when we're seeing the auto market somewhat pressured?
I think you look around at some of the other stocks and things that have been happening even today. I mean, we've talked about Open Door. We've seen the things happening with Kohl's that are quite interesting. I think Tesla, it's all about the story. It always has been, but I think we're in a market environment right now where that might be more true than ever. And so I think people will pay a lot of attention to what's going on with robotaxi, primarily. That's obviously been a big story for the last few months with Tesla. And also just updates on full autonomy, because I think everyone sort of knows at this point that the core auto numbers will be challenged, and they might be challenged for a couple more quarters. But it's always with Tesla kind of what's coming next. And if we get a sense that, maybe robotaxi is going better than expected, maybe there's more out there on FSD in terms of future launches, that could be positive for the stock.
We're seeing some of the other Magnificent Seven rolling out earnings next week. I note that you don't own Amazon. Why not?
We don't. So our models are concerned about Amazon on the top line specifically. So they've sort of noted that Amazon might miss on the top line number. Our models, our AI models, do still think that Amazon will be fine on the bottom line, so they might have some solid margin performance. And I think the reality, the underlying reality for that concern is, you just look at what's going on with tariffs. I think there's still a lot of uncertainty in terms of how that's ultimately flowing through to retailers, Amazon being the biggest one. And so our models are just sort of cautious going into this quarter about what that top line will look like. And then ultimately, more importantly, what guidance will look like to reflect what's coming with tariffs.
Nasdaq right now is at 29.22, so just slightly below yesterday's all-time high that we closed. Why do you think that there is still momentum behind the tech trade, that there's still opportunity on the upside?
Well, Contessa, I think when we came into this year, the core narrative was sort of about the broadening, this broadening trade. Everybody was sort of overweight the mega cap tech stocks, and the rest of the S&P 500 sort of needed to catch up a little bit. I think we've actually seen that. If you sort of look at the numbers, I just saw a chart on this. The top 10 stocks in the S&P 500 right now traded about 28 times earnings. The other 490 traded about 20 times. And if you look back at history of the last 20 years, that 28 times for the top 10, It's elevated, but it's not as severe as we saw in 2020. It's not nearly as severe as we saw in 2000. But that 20 times for the other 490 stocks, that's actually about as high as it's gotten historically. And so if you say, hey, this rally is probably going to keep going, I actually think logically then it would stand to reason that probably big tech needs to keep the fuel going, because otherwise you're going to get into uncharted territory with the other 490. And we know that the big cap tech stocks are not only quality, but they still have this big AI carrot out there in front of them.